Hi all, in this video I'm going to go over two Bitcoin dollar trades I took. So the first trade is based on this setup of very strong sellers down, even penetrating this support for a fair bit and reacting from it. And the move up by the buyers is in a much more broken fashion, and because this sell made a lower low than all of these buys, and even arguably a lower low than this if we consider the spike. It's on high volume and that sort of thing as well. Because of that, I was anticipating another sort of range sell down around this resistance, or around this area, this black line area. So indeed, that is what I saw happen once price had come up in a very choppy way and started to react from this resistance over here. So this is when I got very interested for a sell, and my entry was based on, if I go down to the 50, okay, on the 15, what I saw was some sellers putting up their positions here, making a low, kind of breaking this low over here. So I do consider that as a lower low. And when price went up, in the order book, I was seeing a fair bit of sellers. So that's why I took the sell trade there. But I see that probably one of my main lines for this trade is price action. Especially since my read of price action is quite good now. Price action logic should precede order book logic, at least for the determination of the entry area. So for entry area, that is where the entry should be, then in that scenario, I think the price action logic should take precedence, because the order book logic, it would probably show some sell pressure over here, but just as soon it could just, the order book could just flip and show the buyers come in. So I think the price action trail is a much more reliable indication for where the trade should be taken. So for example, if I was in this area near this resistance, then I know that the price action logic makes sense to at least be on the lookout for sells here. So then I can really closely look at the order book and match whatever order book logic is telling me to sell, and I can confidently take the sell there. So I think the entry was not perfect in this one, because there was a misalignment of price action logic with order book logic. So that's that. But the higher time frame, of course, made sense to me. I did have my stops at a relatively conservative location, which I think was reasonable, and I was anticipating the sell to go down all the way to this area, this low. Now, two things I've learned from this. Number one, it's probably more reasonable, more sensible to target a support area that has not been broken by a sustained break, right? So this was just a bit of a fake out down. So my target was probably more logically placed, and by target I mean actual take profit order. It was probably more logically placed over there, and I definitely did have intentions to have a take profit order, because this was a counter trend trade to me. Compared, if I look at the daily or weekly time frame, my bias on those time frames was for it to go up. So I was just trading this back towards support, where I would have been interested to catch the move up. Now so the read I think was generally good, but then around here I got a little bit confused. And I'm sort of thankful that this happened, because it's given me a good insight, a good understanding of a nuance on what is otherwise a generally reliable setup. So the nuance in this setup was, first of all, the logic I had for this setup was, I have strong sellers coming down over here, buyers coming up, reacting at this seller's area. They could not, of course, make a higher high, so this is the lower high, and then the sells down, buyers up, react at this area, and the sells come down, but they just stop, and they are unable to break this low. So given that idea of, I've got sort of an up move over here, not a very strong one, but a sort of an up move, and I've got this failure to make a lower low at the logical area. My reasoning was, okay, this thing needs to go at least up to the yellow line, therefore I should get out. So I actually got out. I would have ideally hedged the trade, but I can't hedge on this particular platform, so I got out and I entered a buy because that was consistent with my view. But the why did not work at all, and I think this is the core reason why. Usually I have noted, I studied this kind of situation, and what I learned was, when there is a broken push like this, the failure trade works. That logic is sound, but the difference is what I should be targeting, and it is most logical to at least be aware of fresh resistance areas as targets. So this was really the target for the buy up. If I had gotten the buy from around here, this was really the target, because that was a fresh resistance from which it had made a lower low. So I think that really would have been the ideal area to target, and if that was the case, there was no reason for me to exit over here, and there was no reason for me to enter for a buy over here. So it was a bit based on a bit of a flawed logic. And now if this area did not work, this area may have, but with a lesser probability than this area, because it is not as fresh. It has already been tested, and some liquidity has been gathered over there. So that is the logic I came up with to explain why this buy trade failed, and why I should have kept my sell trade on for longer, because the overall read on the sell trade was still correct. Ideally I would have kept the sell trade running and just done a small hedge buy. So now I compared this kind of failure trade with two other examples that came to my mind. Over here. The first is Euro Yen, and in Euro Yen, this was the big weekly move I caught. In the Euro Yen, I see we've got a failure to make a lower low, but there was really no real consolidation and break in this move down. It was just one smooth move down. Of course, we could consider these wicks, these areas, as areas to watch out for, and indeed that is where it started to react from. But generally this was a much smoother move, not a broken push move. And if it's not a broken push move, it's much safer to target for higher, or there's much more profit potential. So that's what I saw. Because there was no broken push and consolidation down, the logical targets for this were around here, or actually around here, but the momentum was strong, and that was the only reason I think it left that wick. So another example that reminded me of was Euro Swiss franc. In Euro Swiss franc, I had taken a trade over here. I had taken this trade, right? So in this trade, again, the idea was very simple. Maybe it can be a bit more. Yes, the idea was very simple. That is, buys come up, sells come down, but they fail to make a lower low. So the logic is that there would be another push up by the buyers. Now on this, for this trade, unlike both euro yen and my Bitcoin dollar trade, the buyers actually built up their positions for quite a while. And so they actually showed accumulation. And so when accumulation is shown in this kind of failure setup, I think that gives this kind of setup more reward potential, and that's why this went up so high. So that makes sense to me. So the two key learnings for me on this particular in this particular trade is these failure trades are valid. They are fine, but targets wise, they should be targeting the last clean break of a consolidation area, and this was the logical target for that. So sometimes the targets may not be worth it if the structure is a bit like this. The other thing is, if there is actual accumulation happening in this failure zone, lower low failure zone, then the chances of the trade performing increase, and the reward actually increases as well. Because the longer it consolidates, the larger the breakout. So those were the things I learned from this trade. Very good. I think that this trade, very good. It's not great that the trade didn't perform, but I'm not too affected by that worse outcome, because I think I've learned I've identified a good nuance in the logic that I'm usually used to playing. So that's all, and thanks, and comments and questions are very much welcome.